Councilmember Thorson?
Here.
Councilmember Peterson?
Here.
Councilmember Wong?
Here.
Councilmember Cole?
Here.
Mayor Furlong?
Here. Quorum is present. Motion to adopt the agenda
So moved, Your Honor.
by Councilmember Peterson. Second by Councilmember Thorson. Any discussion? If not, all those in favor signify by saying aye.
Aye.
Opposed? The agenda is adopted. And I'll turn it over to City Manager Stark.
Thank you, Mayor Furlong and council members. On tonight's workshop, the first three items are related to finance in the city. And so I would ask Finance Director Dan Winnick to kind of shepherd all three of those forward for us. Thanks, Dan.
Thank you, City
Welcome,
Manager.
Dan.
Thank you, Mayor, council members. I'm excited tonight. We've got some financial information that we're going to present today. The one that we've all been waiting for, our annual audit. Exciting. I think you're gonna see that one, that the financial position of the city has improved, both in the general fund and our enterprise funds. Also, I think you're going to see that management has taken a stronger hand on some of our deficiencies that we've had in the past, yet we're still not quite there. We're making some very good improvements, and we still have some more improvements to go forward. Part of that, I want to give recognition to this city council in passing a new purchasing policy in the fall of last year, and two, in this year in adding a different type of position in the finance department that is going to allow us to be able to implement some more segregation of duties that are vastly over-needed. So with that, I want to introduce Jackie Hegel from MMKR, the auditors. I do want to say this was a wonderful experience. I've been audited, and I can't tell you who audited me in the past because we're a public forum. But I do want to say that I looked at this as a wonderful partnership. She has a very, very strong team. She is an exceptional individual herself. She brought together a wonderful team with Robert and Philip. The finance team received them very, very well, did not feel intimidated by them at all. It was pretty much an open book all the way through it. I think we learned things from them. And I'm going to turn it over to Jackie and let Jackie kind of take us through some of the audit and the audit findings.
Welcome, Jackie.
Thank
I don't
you.
feel too intimidated right now. We're just-
Well, thank you for having me tonight. As Dan mentioned, I am here to present the audit for the year ended December 31st, 2021. You should have in front of you a few documents, the annual comprehensive financial report, which is a city-prepared financial report. Within that is our independent auditor opinion. Then there's a separate, smaller document called a special purpose report that has separate audit opinions on the internal controls over financial reporting and the legal compliance. And then lastly, the management report, which is our MMKR document. And that is the document that I will be walking through tonight. I believe you did receive a fourth document, a corrective action plan. That was a city-prepared document that Dan had prepared. So we will be walking through the management report tonight, though, if you have that in front of you. And feel free, as we walk through it, you can stop me along the way, or you can wait till the end, too, whichever you prefer.
Okay.
So starting on page 1 of that MMKR management report, I like to talk, just starting out at the top of that audit summary. We talk about, as auditors, our responsibility under auditing standards and with government auditing standards. The city is responsible for all the financial information that goes into that annual comprehensive financial report. As auditors, we issue an opinion on that financial report, noting that the balances are fairly stated. And then also as part of our audit, we're issuing opinions with government auditing standards and with the Minnesota legal compliance. So the Office of the State Auditor issues a legal compliance manual every year with specific statutes that as auditors we're required to test for. So we don't test every statute, we test the ones specifically that the OSA is requiring us to test. One item I'll note that's a little different this year comparing to previous year is your city did not have a single audit. So that's when you have federal expenditures in excess of $750,000. There's a separate audit of just the federal dollars. So if you remember last year, the city had the coronavirus relief funds. So there was a separate audit of those dollars. In the current year, the city received some of the ARPA funds, but those were all unspent in '21 and going to be spent in a future year. So those funds will be audited in a future year when they're spent. So in your financials, you've gotten the cash and it's unearned revenue, but you have a couple years to still spend those dollars. So in the middle of page 1, there's the audit opinion and findings. So the first bullet there, we note we issued an unmodified opinion, or that's known as a clean opinion, on the city's basic financial statements. As part of our testing of the internal controls over financial reporting, I did have 2 findings to report. We noted as significant deficiencies. To give you just a little background, the level of findings, a material weakness is a more severe finding. A significant deficiency is the lesser of the 2. So both of these we noted as significant deficiencies. The first was with segregation of duties, just due to the turnover in city staff throughout the year and being down an accountant position. There's areas that I feel could be strengthened and improved. I think it's areas Dan and I have talked individually, about. I think the city, eventually adding a position back and kind of restructuring or relooking at the finance department, that would help improve some of the controls throughout the city moving forward. The second comment there is with the city policies and procedures. So as many of you are aware, the city has various written policies and procedures, various ones. So during our testing, we did follow up on some of the credit card transaction testing, verifying that the city was in compliance, to verify if the city was in compliance with the policy. We still noted that there were certain purchases that lacked the invoices and supporting documentation. So you're seeing that again as an internal control deficiency. But the one comment I would like to say is that this was very much improved from last year. I don't have the exact number in front of me. I think Dan did, and he'll comment on it. Even since audit and getting this information, I believe the city might have even gotten more of those receipts in. But at the time, we had to start moving forward to finalize the documents. There are still about 20 or so missing, 15 to 20 that were still missing. And like I said, Dan can probably follow up as we keep moving through on some of the ones they received then. But an area that we still recommend, the city needs to keep working on obtaining all those receipts each month and following up with individuals and verifying, even if credit cards need to be turned off or what the policy and procedures are moving forward if the receipts aren't obtained. The next bullet there, you'll note, we did not have any instances of non-compliance under government auditing standard. And then lastly, like I said, we issue an opinion on compliance with Minnesota state laws and regulations. We did have 3 comments to note there. The first is with claims and disbursements, and you also saw this comment last year. Local governments are required to pay invoices within 35 days of receipt of the goods or the services, and there were 6 of the 40 disbursements tested that were not paid within that 35-day payment period in the current year. The second was with broker certifications, and just annually, your finance department should be obtaining a broker certification form from all the brokers prior to doing any investment-type transactions. This is an area we're going to look into a little more, but we do believe, just due to turnover in city staff, that it just one of the certifications we couldn't find during the year as part of the audit.
Can you explain that just a little bit more? What does that mean? So
Yep.
if we do any buying from a broker, we need certificates from?
There's a Office of the State Auditor requires what's called a broker certification form, that the city fills out a portion of it, and then your broker has to sign off saying that they are going to comply with the investment statutes, the Minnesota statutes that they're going to invest within, what Minnesota statutes requires that local governments can invest in. So they're signing off on that, and then the city should be keeping those on hand. And so for your brokers, which I can't remember if you have 3 or 4. 2. Okay, so one of them we weren't able to find, and like I said, we believe due to turnover in staff, maybe it was obtained. But I know the city is working to make sure it's obtained for the 22 year.
I just assume that if you're going through a broker, they're licensed and everything, so we have to hold on to that certificate.
You do, and there weren't any investments that were improper, so let me
Sure.
clarify that. So all your investments were proper, there was no concerns with that, but there's a certificate that the state auditor requires you to fill out and hold on to with their signature.
Sure.
Yeah, so that certification does 2 things. We give them our investment policy, which you have adopted,
Yep.
that is in compliance with the state statutes. In addition, it can have some other city different thresholds that are in there. They're given that information. We sign off that we've given it to them. So they are saying that they have received it and that they will comply with the state statute and our investment policies. And so the one that we do, I'm going to say over 90% of our investments we have, could not find the other one. And so, you know, whether it was an oversight in between, you know, because they're done at the beginning of a year. Sure. So.
And then the last comment there relates with the credit cards. So we've already discussed it. It just kind of hits you in two areas. It's not following the city policy, which results in a significant deficiency in internal controls, but it's also a Minnesota state statute. So that finding, it hits you in two areas. So moving on to the top of page 2 then. Every year as part of an audit, we're required to follow up on any findings from the prior year audit. So any findings you had last year, we go through and we follow up on all those. There was one that was cleared that I wanted to make sure and touch base on, and that was the quotation finding that the city received in the prior year. So Minnesota statutes require when you're contracting for items between $25,000 and $175,000, you either need to do it based on sealed bids or based on quotations and obtaining 2 or more quotations and keeping those on file. So for 1 of 4 contracts tested in the prior year, that was not followed. For all of our testing in the current year, we did not have any issues, so that was cleared for the 2021 audit. The other items on page 2 that I'll walk through, these are just some other observations and recommendations coming from me as an auditor. These are not necessarily findings, just items I want to point out, some recommendations for the city. Every year I just kind of talk through individual fund deficits. So there are some funds that have like a negative deficit position at year end. So at the year end, December of 2021, there was 3 special revenue funds that had deficit balances. Those were all in the TIF funds, and that was a total equity of about $4.2 million. There was 1 capital project fund that had a deficit of about $1.7 million. That's the MSA fund. A lot of that one is due to the city advanced funds in the prior year, so you advance future allocations. So the accounting for that is that you can only recognize revenue based on your current year allocation, even though you cash flowed funds in advance. So over time, that will get eliminated based on your future allocations. And then lastly, there was the 1 enterprise fund with the deficit, the fiber optic fund. So the 3 special revenue funds with the tax increment district, I just want to emphasize too, just the importance of the adequate planning and projecting and monitoring those TIF funds. So future, you know, with the development, there should be future increments coming in for those deficits. So just making sure the city is monitoring those. Also with individual fund deficits, the city did make progress on those in 2021. So you'll see, you know, some of those deficits are smaller deficits. On top of, I believe there was 2 internal service funds that had deficits at the year end 2020 that were improved to put them in a positive position at the end of 21. The second observation there is just the fiber optic fund. That's something that has just been carried forward from several years. It's the same comment that's in there, just watching that fund. It does have the deficit net position. I believe the city over the last few years has made some small improvements where you're seeing, you know, a small improvement in that fund every year, but we still just want to point that out.
We're hoping you'd fix it when you saw it, so.
The third bullet you're seeing there is the deposit and escrow reconciliations. This is the same comment that you've seen the last couple of years. We still recommend that the city, you should be as a city doing some reconciliation and tracking these escrow and deposit reconciliations. So all the ins and the outs that are coming as you're collecting the money and as you're having to pay them back out. There should truly be a reconciliation, you know, by vendor coming in and coming out that ties to those liability balances at year end that, you know, as part of the audit you can hand over, but also that you have a tracking mechanism and process. And then the last comment there, I think this is just a good reminder that I like to point out. Like I said, it's not a finding, just a good reminder and recommendation. Just with, you know, the city has seen a lot of development in recent years. The Office of the State Auditor does provide some best practices on change orders and contractors' bonds. just making sure that change orders are being approved by city council, and then considering whether, if you do have any significant change orders, whether you need to be changing any of those performance or payment bonds that go with the projects. So once again, not any issue that we had a finding or anything on, but just with all the development, I'd like to just bring it up as a good reminder and recommendation for the city. Is there any specific comments or findings? Maybe I'll ask at this point. This first part is kind of the compliance, any comments we have, and then I'll move forward into the financial results of the city.
Any questions for Jackie? Huh? Go ahead.
Well, I mean, since we're being asked, sorry. So the credit cards, you looked at every single credit card transactions for the year, not a sample?
So for the credit cards, we did pull all 12 months of credit card statements to verify for all 12 months, was there, for any transaction, was there a receipt?
And how many transactions were there?
I don't have that number in front of me, but we can get you that. Maybe Dan has it.
There were 194 transactions for 2021. At the end of the audit, there were 20 missing invoices. Subsequent to the audit, I have documentation on 9 of those, so everything from August of 2021 going forward is in compliance. And there's 11 receipts that are outstanding, and those are from former employees of the city.
Okay. So, current and former employees, do we have a signed credit card user agreement from those employees?
We do for all current employees. I can't speak to if there are on record for the past employees.
Well, and the reason I'm asking is just because, you know, last year this was a huge concern, and we were kind of assured that it was going to be resolved, and it's troubling to hear that there's still some of these things. And I'm looking at the credit card user agreement, and, you know, part of that, it says, you know, you're acknowledging that you've read and understand the purchasing policy, and if you, where's that part? Oh, basically says that if you're not gonna follow it, you're gonna reimburse the city. And so we have not had any discussion from last year's findings about those unresolved credit card purchases that are still missing and how we're gonna deal with that. So I don't know if there's, you know, obviously we have to keep going with this presentation, but, you know, at what point are we gonna have discussion about that? Because we have not had discussion about the last year's findings. So that's why I'm talking about now, because it's a workshop and we're being asked to ask these questions. So I don't know if we're directing that towards city manager. And your thoughts on how we resolve this?
Well, Councilmember Thorson, I agree. This is improved from where it was at. The reason why I answered the way I answered, so from August of 2021 in current, we have documentation for everything. So your question on the former employees, I can't answer whether they signed an agreement or not. That's something that I'll look to see if we can find. If that agreement is in existence and there was an agreement that they should pay for anything, I think is where you're going on a personal basis, or reimburse the city for any purchases that if they cannot document that purchase, that's something we can have a discussion, but I think the first part is we're gonna end up having to look to see if there's existing agreements. I don't know if the policy stated and whether it was followed, that part of it was followed. I was not here at that point in time. But I do know that since that, everybody does have an agreement that's signed. We have it in record. And at this point in time, since I joined the city, we do have documentation for all the credit card purchases.
Yeah, and I just want to.
So there has been improvements, and so I can't correct everything that's happened in the past. I think we're moving in the right direction. But we definitely will look for those.
And I know the purchasing policy's been modified, but it was originally adopted, or the last adoption that I'm looking at was August 4th, 2020. So, you know, I would imagine that we should have had anyone who has had a credit card, we should have on file a signed, you know, agreement, that page with the, it's called the credit card user agreement, which again states that they acknowledge, they've read and understand the policy and they're gonna follow, and if they fail to follow, they need to reimburse the city. And I, you know, so that's my question, is that, do we intend to follow up on that? And if we don't, we should have discussion on why, and if it's because we just don't feel it appropriate, why do we have it in the policy? You know, so. And then the segregation of duties, you know, that's been an identified issue, I think, for us as long as I've been on, and I think you can attribute that to the size of our city. Certainly, there's been a lot of turnover. We're on our third finance director in, has it been 5 years? So I think that's just something we're gonna continue to struggle with, but do we have any thoughts or plans that are in place that you might be able to share with us to help alleviate this ongoing concern?
Yes, absolutely. So I think, and Jackie and I have discussed this, I think two of the areas that, that are probably of more of concern are both accounts payable and payroll. And both of them have, since I've been here, have fallen into one individual's hands. And that's where with this restructuring, that's where the checks and balances are going to be brought in. And the segregation of duties, where the process, I'll take payroll, where the processing of payroll itself or the actual issuing of the checks will not be done by the person who is entering that information, nor has access to a vendor record or an employee record. So we have a new employee beginning on this upcoming Monday. So we'll start to train that person into, on the utility side, there's a utility individual that has been doing some of the accounts payable. We've been training that person in. We'll take over a part of Jackie's responsibilities. Jackie has moved up in classification, and she'll be playing more of the oversight role on the Encode system, which is our financial system. We will make some changes in who has authorization for certain things right now, because she's been doing the function. She has it basically from A to Z. Now, we do have a lot of checks and balances that are in place. I review each and every single payroll, and I review each and every single accounts payable. For an accounts payable, I go out and I look at the vendor record to make sure that it matches the invoice. I make sure that the invoice was actually approved on Laserfiche by the appropriate person, meaning a department head. I review the account codes that are given onto it, the dollar amount. So we have checks and balances in place, yet from a systematic standpoint, we shouldn't have somebody having access A to Z, because something could go wrong, and we want to prevent that. And so, yes, we do have things that are in place. It'll probably take us, you know, let's be realistic. If we have somebody coming in on Monday, it'll take us probably a month and a half to get that person up to speed. They'll be kind of doing dual kind of purposes before we can put them totally into the accounts payable and payroll side to it. I would say that we're probably about 2 months, 2.5 months out from being where I would like to see us at in those two areas.
I think this is gonna be my last question. Because you already addressed the brokerage certifications, and that just seems like it's a documentation oversight, or maybe we do have it here somewhere, it's just stuffed in a file folder that no one knows where it is. But the claims and disbursements, you know, we're obligated to pay bills. State statutes, 35 days. You said you tested 40. You just randomly pulled 40, and 6 of them weren't. Why is that happening? Is it a particular type of transaction that's occurring, or what? Can we get some additional detail into why that's happening?
Well, I can't speak to exact points of why it's happening for sure. I think some of the contributing factors to why it happens is that basically on checks, they come to the city council twice a month to be approved. So if there's, like after tonight for the city council, there will not be another city council meeting for 21 days approximately. You've got 35 days per statute to pay a bill. If the department head hasn't approved it, I'm just going to say it's already been out. It's been out there for 20 days. They haven't paid it. We got 21 days to a city council. That's 41 days. We're over the 35-day limit. That's part of where the city manager, Mr. Stark, and myself have had the conversation virtually from the day that he came in, that we would like to be utilizing his authority of using early release. In other words, we would actually like to, and I'd like to implement it when I make the changes for the accounts payable, of issuing checks every week. I think that'll greatly reduce this amount. City council will still have the final approval on all, you'll still get all your same reports. I would just like to be able to speed that process up. I think that'll greatly cut down the 35-day factor to it. Where I came from in Ramsey County, checks were issued 3 times a week. So it's just, I think part of it, the frequency of the check runs that are being done currently today. Again, even in Ramsey County, everything was always given to the county board, same as the city council.
Jack, you do find that kind of, is it unusual or is it pretty typical for a city our size to have the claims and disbursements? I mean,
Yep.
just what he just said, I mean, we got 3 weeks, we're almost where council's not even meeting, so.
Yep. I don't want to downplay by any means, but I would say this is the most common finding in our local government audits, whether we're talking schools or cities. Probably, like you said, somewhat due to the process. So it is a common finding, but if the city could look for ways to improve it, like Dan's saying, or, to modify anything, you still have to follow state statute
Right.
of the 35 days.
If I could just add a couple of things. As Director Winnick noted, our next city council meeting is in 3 weeks. But even beyond that, the finance folks have to get the claims packet put together and get to Jenny to get in the packet, usually the Thursday before tonight, for example. So there's another 5 days. So now we're at 26 days. I think they like to get it done a day or two early from that to run it by Dan to do their internal stuff. So even with these city council meetings that are 3 weeks apart, it gets very difficult. The other thing I would say is, I'm guilty of this one myself, that, our claims for a new employee, our claims numbering system on the everyday stuff is pretty simple. The claims numbering system on a payment for a construction project is very complex to me. And so when I get these claims, it might take me a few days, 5 days, to kind of bird dog the correct coding for that claim. And I'm sure that as time goes by, it will take me less and less time. But as we've talked about, we've had a lot of turnover, and so there are a lot of new employees trying to figure out how to submit these claims.
Okay, well, I appreciate the response. My question was just, why is it happening? Thank you for answering. I'll just reiterate that it's state law. We pay our bills within 35 days, and I hope that we can work towards accomplishing that so that next year this is no longer a finding.
I do want to add, Councilmember Thorson, that's my intention.
Thank you.
All right, we'll keep moving through the management report then. Moving over to page 5, I'm going to skip ahead a couple pages if you're following along. The graph on page 5 there shows a graph of the taxable market value of the city for the past 10 years. I'll just note that for the 2020 year, your city's taxable market value was up about 10.7%, and then another 8.8% for taxes payable in '21. And the graph you're seeing there is similar to the graph that every other city looks like, so no unusual trends. Going to the next page, top of page 6, that's a graph of the tax capacity. For the current year, 2021, you're seeing an increase of about 6.6%. And then at the bottom of that page, we show the average tax rate for the city of North St. Paul, broken down by the city, county, school, and any special taxing authority. So for the 2021 year, you can see the total tax rate went down to 130.6, and you can see that the city portion is slightly down in the current year. Moving forward onto page 7, this table here is a snapshot of the governmental fund change in fund balance. So this is looking at all the city's governmental funds. So that's your general fund, any special revenue funds, debt service funds, and capital project funds. The top part of that table shows up by classification of fund balance. So that's your non-spendable, your restricted, committed, assigned, and unassigned dollars. And then the bottom shows it by the 3 major funds the city has with all the non-major funds combined into one row. So for the 2021 year, the city ended with a total governmental fund balance of about $10.1 million. It's up about $490,000 from the prior year. A lot of that is in the general fund. The city saw improved financial condition in the general fund, which was up about $844,000 this year. And we'll touch base on specifically on the general fund as we move forward here. The next couple of tables I'm going to touch base on page 8, it's a table of the governmental fund revenue per capita. So we do have some statewide average. It's from the 2020 year, the statewide information is. Looking at the city of North St. Paul, we have 3 years of information. For the 2021 year, the governmental funds revenue per capita was the $941 per capita. That's down about $179 from the prior year. A couple areas that I'll touch base on. Majority of that change is in the intergovernmental revenue line, which is down about $111 per capita. That is due to the CRF funds, so that's the coronavirus relief funds that the city received in the prior year. So if you're looking at the intergovernmental revenue line, you saw from 19 to 20 it go up, and now 20 down to 21 it went back down. In the other revenue area, you also saw a peak up and then back down. A lot of that is due to, in the prior year, the city had a gain on assets held for resale, and so that ran through that other revenue line last year. Similar information on page 9. The table there is just the governmental fund expenditures per capita with some statewide information. Overall, the expenditures per capita were down about $925. You're seeing some of that is in that current area, the top part of that table. Most of that is in that all other category, and that's due to all the economic development activity in the prior year. There wasn't as much activity in that area going on in 2021. The other significant change you're seeing there is in the capital outlay and construction. Once again, the city has had a lot of street improvement projects and development the last couple of years, so a decrease in that area in 2021. Starting on page 10 then summarizes specifically drilling down into the general fund. So on page 10, the graph there shows the general fund financial position for the past 5 years, showing the fund balance of the general fund, the cash balance, as well as the expenditures of that fund. So for the 2020 year, the total fund balance was at about $3.6 million. That was an increase of about $845,000 from the prior year compared to a balanced budget. As many of you are aware, the city does have that fund balance policy of 35% of the subsequent year's budgeted expenditures. So at year-end 21, the unassigned fund balance in the general fund was at that 44%. Moving on to page 11, the top graph there shows a graph of the general fund revenue comparing current year actual to current year budget. And by current year, I should say 2021. The total general fund revenues were about $7.3 million. It was a decrease of about $246,000 from the prior year and about $600,000 over budget. Some of the budget areas, license and permits, were over budget due to more development than anticipated, and taxes and intergovernmental revenues were also over budget, in part due to conservative budgeting. And then the bottom of that page shows the general fund revenue by source. So it shows each source and some history for the past 5 years. Overall, the revenues, like I said, were down about 250,000. Most of that was in the intergovernmental revenue area, once again, due to those coronavirus relief funds received in the prior year. Next page shows similar graphs just of the general fund expenditures. The total general fund expenditures for 2021 were about 7.2 million, a decrease of about 225,000 from the prior year and about 215,000 under budget. The variance to budget was mainly in the park and recreation area, and that was specifically in the parks maintenance department. The contractual services were less than anticipated in the budget. And then comparing current year to prior year, if you're looking at that bottom graph, the largest decrease was once again in that park and recreation function, mainly in the recreation department due to decreased personnel service costs.
Is that Park and Rec, is that due to lawn mowing service that we were thinking about doing?
The maintenance portion, yes, is due to that Public Works is actually doing the lawn mowing services versus contracting, which in this current year budget we've taken out. And for the recreation component, it was basically the reduction of a position that makes up that difference.
That was gonna be my question. I recall it was a budgeted $100,000 for contracted mowing services that we never did, so.
See, now that has me scared going into this next budget process because that's exactly the dollar amount. That's that was a compliment because you're very well versed and you're paying attention. That has me worried.
Moving on to page 13 then, here we start the discussion of those enterprise funds of the city. So the electric fund, the water fund, surface water, wastewater, the fiber optic fund, and the solid waste fund. So that table on page 13 is a quick snapshot of those enterprise funds and that change in that financial position. The top part of that table shows it by classification, and then the bottom part of that table shows it by each of the individual funds, which you can see all of those funds had a positive improved financial position in 2021. So overall, the enterprise funds were up about 2.7 million. And as you flip over to page 14, we'll walk through a brief summary of each fund. On page 14 shows a graph and a table of the electric fund operations, just to show you some trend analysis there. Overall, the change in the net position increased about 950,000. The city saw positive operations. The gross profit results in this fund increased by about 190,000 compared to the prior year. This fund did have increased rates, which had an impact on the fund. Then flipping over to page 16, shows a table of the water fund for the past 5 years. It summarizes, the operating revenues, operating expenses. We detail out that depreciation expense on a separate line there. But overall, the water fund had an increase in net position of about 880,000. The operating revenues were up about 120,000 due to increased consumption in 2021. The operating expenses were slightly down, about 50,000, primarily in the professional services and materials and supplies areas. Surface water fund on the next page, once again, positive operating results. Overall, the change in net position after any transfers was up about 280,000. Overall, the revenues increased, mainly due to an increase in the customers. The one big item there that I'll just point out is if you're looking at that capital contribution line, you're seeing there was 930,000 in 2020, nothing in 2021. Just a reminder that last year, there was that capital contribution for the MSA funds. As I was saying, you advance funds for a street project. So when those MSA funds were put in to the surface water fund for the capital project, it's shown as a capital contribution. It gets split out on a separate line. So I just wanted to point that out just as a reminder of what happened last year for that 930,000. Moving on to the next page, the wastewater fund. Overall, had positive operating income, and after transfers out, ended the year with a change in net position of about $545,000. The operating revenues were pretty flat, up about $5,000. Overall, the expenses were down about $140,000, and that was mainly in purchase utilities and professional services, saw an increase last year. And then page 19, the fiber optic fund. As we already briefly talked about, the end of the year with a deficit net position of about $666,000, but did see a slight improvement, about $68,000 in the current year.
You still haven't fixed it.
And then the last enterprise fund is that solid waste fund. Once again, had positive operating income in the current year, and after any transfers out, ended the year about $34,000 increase in the net position. Overall, the operating revenues increased about $10,000 due to an increase in customers. The expenses were up a little bit, about $33,000, mainly in the professional service area. And then in that non-operating revenue area, the city has received a grant every year that is credited into this fund. So that's at $33,000 you're seeing there. But overall, a slight increase, about $34,000 in the net position. And then the last couple pages I'll touch on is the government-wide financial statements. So on page 21, the table there. The government-wide financial statements is when, as a city, you take all your governmental funds, which are on a modified accrual basis of accounting, and then you add in any capital asset activity of the city, any long-term liabilities, such as any pensions you have with the PERA, any OPEB liabilities you have, and they get all rolled up into what's called the government-wide financial statements, one big snapshot of the city with all the governmental activities and the business-type activities. So that's what this table is showing. So overall, the net position, when you roll up all those governmental, business type, include all capital asset activity, all long-term liabilities of the city, you're seeing an increase of about $6.6 million in the net position of the city for 2021. The business type activities, which is in the middle there, aligns with just what we walked through each of the individual funds. When you're looking at the governmental activities, up about $3.5 million, a lot of that is in that net investment in capital assets, and that's just due to the continued investment in the infrastructure and the capital assets, all the street projects and the road projects throughout the years. So with that was all I intended to go through on the financial results. Overall, a good financial year. Like I said, the general fund ended about $845,000. Improved financial position compared to a balanced budget for the 2021 year. But I can open it up again if there's any other questions on the financial results or if anyone wants to go back to anything else in the report.
Any questions for Jackie?
So, we're really in the black. That means, are we charging our residents too much on these different, I suppose that's not I could answer that.
Yeah, so for the enterprise funds, you had positive operations as far as what you charge your residents as a city, discussion to have, as part of the audit. We show the results of the audit, based on what you charged and the expenses.
Funds all the time, and I don't know what the answer is on that. Dan, do you know?
Well, yes, this, you have to realize that a financial statement is a snapshot in time. It's December 31st. It is not including whatever your future plans are. Again, we've had a number of discussions in which we will have a fund balance discussion. The one tonight that I've got on the policy part is just about the general fund, and as Jackie had referenced, we have a 35% 35% policy right now to maintain that. I'm looking at increasing that, but that'll be later on. We will have a fund balance discussion on our enterprise funds. A part that we need to realize is that the infrastructure of the city has a lot of needs. Later tonight at City Council, we'll be issuing, hopefully we'll approve the sale of a bond. Part of that bond sale is backed up by revenues in 3 of our enterprise funds. And that's not being reflected here, but we're going to be increasing our debt payments in 3 of those funds. Right now, we're on a trajectory of every 2 years that we're 2 to 3 years, we're going to be going out for additional bond issuances. And again, based upon past history, anything that's related to water and sewer, they're going to pay their own way. So that's part of that rate that we're charging our customers. So as we've seen our fund balance increase in the next 10-year outlook, it is going to decrease. And so that's without making any changes in our rate. But we will be having a separate workshop just on fund balance and on the rates coming up this year and coming up probably within about a month, month and a half. And we'll have that discussion. So to answer your question, at a year end of 2021, we've increased all the way across the board. We're looking good. Is it time where we say, hey, we need to potentially reduce our rates? Let's not get ahead of ourselves at that point in time, because we do have some other needs within the city. And it does open up some nice options for us. Again, we're going to see that interest rates are going up. They're going up fast. I wish we would have had our bond issuance 2 months ago. We would save the city some money. That was our original intention, if you remember from last year. But if we look back this time next year, we're probably going to see the interest rates going to be up probably 2% more at least. That may be a time that maybe we want to use some of that fund balance instead of the next time we go for a bond issuance, that we do an internal loan. You know, for the street portion of our, instead of bonding, the street portion, that we use an internal loan. The fund balance would help us do that. We can also make some interest for our internal service fund, or enterprise funds. So let's wait to have that overall discussion on the fund balance to make sure we're comfortable where we're at least for a 10-year look, before we start to jump to the conclusion that we're overcharging our customers or that our fund balances are too high.
Councilmember Thorson.
Just I mean, I understand Councilmember Peterson's question and appreciate the Finance Director's response. But, you know, naturally, you know, we open these books and we look at it during this workshop, and then the rest of the year, we have other topics, so it doesn't really get discussed. So it's a legitimate question, but yeah, like he points out, if you'll notice on the bottom of all these funds, it says income before transfers as a percentage of operating revenue. A lot of our enterprise funds have a dedicated amount that they transfer back into the general fund to finance day-to-day operations. That number has fluctuated over time. I think our goal, or the goal, has been to transition away from such a large transfer and reliance on enterprise funds because of the things he points out. But, you know, you look at that and it's essentially, you know, this number here is in day-to-day or regular terms, it's your margin. It's what you're making after your expenses, what you're charging. And some of these look like they're pretty high, so naturally someone may say, well, you're charging too much for the water fund. Well, as Finance Director pointed out, we have a lot of infrastructure needs. And so that traditionally has been the you know, explanation as to why we're raising rates. But the absence of a fund balance policy, I think, kind of muddies that water. I mean, we know these things are going to cost money, and we're either going to get it through taxes or fees. But the question is, what do we charge, you know? And so that's going to be an ongoing thing that we need to look at. But I think, you know, in certain funds such as, let's take the solid waste fund, for example, you know, that is something, you know, that my personal opinion is like it's a pass-through. We don't have city trucks collecting trash. We do the billing, but we do that by our own choice. I mean, we've chosen to interject and be the middleman out of convenience, I suppose, is one of the reasonings for it. But in a sense, you know, it's a pass-through, and we're marking it up still, and we're making money, and that fund is continuing to grow. What's the plan for that solid waste fund? I mean, are we saving up to buy new trash bins in 10 years? I hope not. But that's certainly something that we should be able to look at and say, you know, the current trash contract is set to expire. We're gonna have to look at that soon. We have not raised rates since we established that new hauler. And, you know, we have a substantial fund balance in that fund. So that might be one that, you know, the argument of needing to continue to build up a fund for future capital, this is not one of them. And so maybe it might make sense to not raise rates or potentially operate at a deficit for a few years as like a discount for the years we've overcharged. I mean, these are things that we can look at. And when we have those discussions, hopefully we remember to pull these out and look at this stuff. So it's a good question, but as Finance Director pointed out, there's a lot more context behind it. But yes, we're in the black and that's a good position to be in. But there's all sorts of uncertainties, inflation, interest rates, the economy, you know, so, thank you.
No, Councilmember Thorson, you make a very good point in bringing up the solid fund because it does not have, you know, a capital need per se versus the other enterprise funds. That is truly the intention of what we're trying to do, and that's where you'll see that I think we're just entering year 3 of the contract. They have a 3% annual increase now that goes in for the remainder of the contract. I think the contract's 5 years. In addition, we've been experiencing somewhere between 4 to 5% increases in tip charges. It was not the intention to raise that rate at all during the time frame of that contract because of the fund balance that's in there. And then, you know, we can take a look at where that fund balance is after that point in time. But absolutely, that the intention of this fund was not to look at least for the 5 years of that contract, to raise the rates on that. And then to run negative losses was a thought.
Anything else for Jackie? Jackie did a great job. Appreciate it. Great analysis. And with the finance director, I think at the start of it, when we met, I knew that things were going to go good this year. So I think you had a good team to work with. So thank you, Dan, and your group and your group. So thank you.
Thank you.
We'll do it again next year. Right, exactly. Okay.
Item number 2, giving a quarterly update on the general fund and the enterprise funds for 2022. Again, there's not a lot of data. We haven't received property tax and so forth on the revenue side for the general fund, so you're going to see that the general fund. So first of all, we had a balanced budget is what we adopted for the 2022 of $7.9 million. Revenue to date is really only $600,000 as of March 31st. The bulk of that's in permitting, and again, just because we haven't gotten, you know, the property tax collection yet at this point in time. The city has very reliable numbers as far as percentage of collection of property taxes. We're consistently year after year right around that 99% collection rate in the first year, which is fantastic. So I've taken that information and kind of done a projection outwards for the revenue for the year, and I think we'll end up being positive overall of revenue for, at this point in time, of looking at it for 2022, compared to what we budgeted, about $255,000. Our expenditures for the year, I think we're going to be pretty close or on track to where we're at. We'll have a little bit of a positive. Again, I think we're keeping that trend moving forward where we end up having a surplus in our general fund. I'm estimating it's somewhere around that $300,000 at this point in time. Again, a lot of things can change as the year moves on. Again, I'm seeing the exact same thing in our enterprise funds. All of them I'm projecting for this year at this point in time to be positive. Again, adding to the fund balance that's in there. Again, the debt that we're going to be talking about tonight, the new bond, is not included in here at this point in time. But again, I think we're sitting very, very well. The wastewater isn't performing as well at this point in time from a budgetary standpoint, but again, for year end, we're still looking at a positive fund balance of $175,000 by year end. Surface water positive, approximately $360,000. Solid waste, I'm looking at $50,000 at this point in time, projecting it for the year, still positive. And then fiber optics, we're looking at that we'll end up with about $112,000. Again, trying to turn that negative fund balance into a positive. I think it's got about a 30-year plan before it actually turns, no, it won't be that long, but it's out there a way. Unless Jackie really did want to help us out trying to get that fund balance into
Told her she
positive.
should fix it.
So I'm going to try to go a little quick. I know we have another item, and I'd like to talk about the fund balance, a little bit of the general fund. So to sum up kind of where we're at for the first quarter is I think we're looking very good in our general fund, in our enterprise funds, and really it's no surprise. We've been kind of looking that way for a number of years, and we just got done seeing how we ended up at the end of 2021, where we were positive across the board. So again, I do want to say that a lot of the credit, and it actually goes a long way when we go into a bond rating call, a lot of the credit has to go to the management of the city, our department heads. We have a very frugal group for the most part. They're very conscientious, and they really do monitor their budgets on a regular basis. And that really is what, ends up having positive results for the city. Especially we see time and time again, we're under expenditures. Now, this year could play out a little bit different as inflation continues to rise. We see a lot of it, especially in our energy costs, especially when we're talking about fuel costs. So we'll keep that under a close eye on that as the year progresses. So if there's any questions on the first quarter of 2022, I'll take those now.
Any questions on the first quarter? Not? Move ahead.
Move ahead. I'm going to spend some time and talk about a change, and I'm not looking for a total rehaul of our fund balance policy. I think we have a very good fund balance policy. I just kind of want to look at the changing of that 35% for the general fund of our fund balance. The state auditor recommends 35 to 50%. The city of Oakdale policy strives to get 50%. Maplewood has a minimum of 40% and strives for 50%. I'm proposing, especially with how we ended 2021, where we have 44% of our undesignated fund balance in the general fund, that we change our policy, that we do maintain it at a 40%, and that we do strive for that 50%. Part of, and we'll hear a little bit more today when Baker Tilly is here, when we talk about the bonds and the bond call, a very important component that they look at when they give us our bond rating is our fund balances. And are we adequately holding enough of our fund balance there? And one of the questions that they specifically had asked was our general fund. And again, number one, do you have a policy? Yes. What is it? It's 35. Oh, you're kind of on the lower end. And that, but you've got 44% at the end of this year, but your policy isn't supporting that component to it. This is an item, again, I kind of I didn't give John, our city manager, John, too much time when he first walked in the door. kind of wanted to have a number of items that we kind of discussed. I give them a little bit of time to kind of digest them, and then I come back at them again. But this was one of them that we had talked about, and I believe right away he was very supportive of looking into that, and I actually think that he had said, from where he had come from, and we don't mention that name anymore, that they had a fund balance policy of minimum of 40%. And so that really is what is in line with a lot of the cities. And part of me as a finance director, one of the concerns that I always have is that, as Councilmember Thorson had talked about, we transfer $820,000, and the majority of that $820,000 does come from our enterprise funds. That is subsidizing our general fund to help reduce taxes for our residents, is the bottom line to it. But we also have heavy reliance on intergovernmental funds to the tune of about $1.3 million in local government aid. There has been for a number of years, and someday it's not just going to be talk, it's actually going to happen. They keep talking about reducing that local government aid. Well, that 1.3%, or that $1.3 million for us on a $7.9 million general fund, which we need, is going to be a huge impact onto us. That right there is 1/3 of our, fund balance. And so I think we do need to take a prudent and a good fiscal approach to this and look at and since we have the opportunity too, because we did finish 2021 very strong, that we do look at raising that fund balance policy and move that number up to 40%, and actually do strive to move it forward. And so I would like to see us move it up in 2022 to 40%. You heard Jackie talk about, and it was in the management report, that we're at 44. And that additional 4%, I'd like to the city manager and myself will come back with a recommendation on June 7th, one with the formalized change in the policy, the fund balance policy, just on the general fund component to it. And then in addition, some recommendations of utilizing those one-time dollars of that 4%, which amounts to approximately, I'm just going to say about $300,000. There are some needs that we have that's been discussed, and I think we'd like to bring that those items forth for the city council's consideration. So with that, I'll entertain any questions and comments.
Questions? Going through everything, that 800,000, what would were we very conservative in our budgeting for 2021 that we came up with that number, do you think? Or is there things coming out of COVID that we weren't able to do that we could be doing? Staffing levels, I know possibly. I mean, that number is, it's a pretty significant number. And am I asking the question right, or?
Yeah, nope, you are. The majority of that $800,000 came from increased revenues. Really, the majority of that was on the permitting side, which is something that isn't, I'm going to say, necessarily reliable moving into the future, but it was much higher than we had anticipated or budgeted.
So that's the construction, or the,
Yeah.
okay.
And on the expenditure side, some of that savings, one we identified today, the $100,000, we've already taken that out of the budget for this year. So we won't see that component in there. And again, based upon my projections, and they're preliminary and they're the best guess for where we're at the end of March, our expenditure side was only about $70,000 under budget. It's our revenue side, again, because of permitting is still doing very well for us, above. And again, we try to do conservative estimates. We certainly don't want to put the city in a position where we don't have enough money to do our operation, and we end up having to have bigger spikes in tax levies for our residents.
And I would just like to point out to the new council members that this is probably one of the, I wouldn't say confusing part, but it takes years to understand, I think, the budget. You know, it's because we get new finance directors and how it's presented and stuff, so it's, I just
Is that a
want.
good thing or a bad thing? I'm a little confused.
Right.
No,
Well, thank you.
you bet.
Councilmember Thorson.
Well, I disagree. I don't think it's hard to understand, but that's just my opinion. Yeah, I guess in an ideal world, we wouldn't need to transfer any money out of our enterprise funds, and we wouldn't be reliant at all on intergovernmental transfers, local government aid. There's a lot of cities, Bandus Heights, they don't get a dime. We choose to operate with that. If, you know, we could explore that. I think in the past they have, but they've been very controversial and upsetting topics that, you know, one was contracting the police services with Ramsey County. It was never seriously considered. It was just a budgetary discussion. But that still gets brought up today because we went, you know, what does, and the reason why was because it was in 2011, and they were talking about making serious cuts to local government aid. And that put us in a position to say, well, we need to see what does that look like. And we did make some tough decisions. Closing the community center was one of them. Building up a LGA reserve fund, but I know now that's not what it's called, but it's essentially fund balance now. But that was in anticipation of if, from things we can't control, they take away $1.3 million, what are we gonna do? How are we gonna react? And it gives us some time. But, you know, I don't think that's a bad thing to have those discussions and know, worst case scenario, what are we going to do? I know I personally don't wanna see the police department leave. I don't wanna see the fire department leave. I don't wanna see us contract out public works services. And we were told that when that exercise happened, mind you, I wasn't on the council at the time, but, you know, the Washington County, Ramsey County, they both said, you're better off having your own police services. You have more control, and there's various pros and cons, but, so, you know, from a budgetary standpoint, I think it's good that we, you know, raise that balance, and then continue on and establish fund balances in the enterprise funds, knowing that it's not a requirement, but it just makes sense to do because it helps us with the budgeting discussions and then goals and where we want to be. Because oftentimes in the past, that has been used as an excuse to raise funds or raise fees. We don't have enough money in the fund balance, but what does that mean? You know, we don't have a fund balance policy, you know, so it will be good for conversations moving forward that we explore that, but I'm supportive of what you're proposing, 40% with the goal of being near 50.
Terry, I'm gonna pick your brain. Didn't we experiment with, we didn't rely on the LGA 1 year, or didn't we ever do that? I don't, maybe I imagined that.
No, we just had a policy that we're gonna wean
our
away,
meetings?
wean away from it.
Yeah, okay, that's what it was. Okay.
Well, I know it's reduced too. I mean, we get 1.8 million, correct, currently?
Approximately 1.3.
Or- Well,
Yeah.
I thought it was higher in that we only allocate the full, you know, we used to allocate the full percentage that we would get into the general fund.
Yeah, we're about 1.5, 1.3 comes into the general fund. The rest is, yeah,
So,
is in
so
the,
there was a certain amount that we said, okay, well, we're gonna set this aside. And once that
yes.
LGA reserve fund got built up, then we no longer did that. I think that's what you're talking about.
correct, yeah. And the fund is actually I think it's what's known as the capital reserve or capital replacement fund, yeah.
Okay. Got one more topic, or is that it?
That's the last finance topic for tonight. We do have one more topic for the workshop, and that is the proposed sign ordinance changes that have gone through a number of bodies. And so I'd ask Brandy Howe, our planner from WSB, to give a presentation on those changes. Thank you.
Welcome, Randy.
Thank you, Mayor and City Council.
Thank you, Dan, very much. Appreciate it.
Thank you. I'll try to keep this fairly brief since many of you have already heard this presentation. As was mentioned, the City Planning Commission has been working on the sign ordinance update since about last October. And this project came about for a couple of reasons. The primary one is to make sure that it's in conformance with the Reed versus the Town of Gilbert Supreme Court decision, which prohibits communities from regulating content. And most cities across the country have had to update their ordinances since 2015. In addition, the project is being undertaken to help improve clarity and simplify the ordinance overall, and then eliminate regulations that are just unnecessary, and then strengthen those that the community wants to focus on. So we have taken the ordinance and kind of, we're scrapping it and starting over, and we're pulling those main provisions that the Plan Commission has determined should remain. And so those items that are the same are the way that we measure sign area and sign height. We are keeping a 10-foot setback for permanent signs. All signs must still be maintained in good repair and safe condition. And then multi-tenant buildings must always provide a master sign plan, as is currently required. What's going on here?
Uh-oh.
Okay, so what is different? We've got a side-by-side comparison. So the existing ordinance requires applicants to get a permit for all sign types, whether it's a temporary sign or a permanent sign. The new ordinance, we're only going to require permits for permanent sign structures that are going to be, put into the ground or attached to a building. Sign heights are going to be limited sign heights will be based on the type of sign. And before, in the current ordinance, there's a maximum height of 25 feet in the MU districts, so all of your commercial districts, and then 6 feet in the residential districts. So we're trying to make it a little bit more streamlined so that it makes sense based on the sign type. And then the dimensional standards are pretty close to what they are now, but we're lowering the maximum, which is required in the MU3 district, from 400 square feet down to 300 square feet. And in the current ordinance, there is no process for appeals, and so we have created that, and they will be taken to the Planning Commission, and they will provide a recommendation with final decision by the City Council. So here's an exhibit that shows the existing sign code matrix in comparison to what is proposed. And the existing sign code matrix is only for the commercial districts, so there's a similar one for residential districts. So as you can see on the right, it's much simpler and it's a little bit easier to administer for staff. But in general, the maximum aggregate sign area is basically the same. We're no longer, however, referring to the square footage of the buildings or the area of the wall specifically for dimensional standards. And so the next couple of slides will go sign by sign type in terms of what's old and what's new. So roof signs in the existing code are only permitted in your downtown district, and they're not addressed in the rules table, so height is presumably 25 feet from grade. So in the new code, we're allowing these in all non-residential districts, and we're limiting it to 6 feet in height from the roof, which is based on this Love's ice cream store sign. Illuminated signs are not presently permitted in your code in any district, and so we're going to open that up and allow illuminated signs, internally illuminated signs, in your non-residential districts. Monument signs are not permitted downtown except for civic uses, and anywhere else they have a maximum height of 25 feet. In the proposed code, we're going to let monument signs be allowed in any non-residential district and for multifamily uses in any district. And then they can only be 8 feet tall instead of 25 feet. The existing code has a definition for an electronic message sign, but it doesn't have any regulations specific. So we have created those, and they will be permitted in any non-residential, allowed for any non-residential district, land use. So a school in a residential district could have one. And churches too, yep. Exactly. And then they would also be allowed in the non-residential districts. We have established regulations based on how long the message can dwell, brightness, and then the text size based on the speed with which the street is limited. Window signs in your existing code are they are allowed, but with a permit, and they can have up to 20% of the window area covered. In the new code, we are not requiring permits, again, for the temporary signs. And then the maximum percentage of window coverage would be 33%. And that would apply to both temporary and permanent signs. So neon, sandwich board, feather signs, and political signs. In your old code, neon signs would be limited to 20% of the window area. In the new code, we're not specifically regulating neon signs, but if they're placed in the window, then they would apply to the window sign regulations. Sandwich boards, we're basically keeping these regulations the same, which is 1 per business, and it must not be bigger than 10 square feet or 4 feet tall, but we're adding that it has to stay out of the right-of-way, or out of a walking path. It can be on the sidewalk, though. Feather signs are not addressed in the existing code, and in the new code, we're allowing them, but with 2 per site, and there has to be at least 100 feet separation between them. And then political signs, in the existing code, they are allowed. There is a time limit before and after the election. And based on the Reed versus Gilbert case, we're not specifically regulating political signs, but they're treated like a non-permanent sign, and you can have it in your yard without any time limit. Billboard signs, they'll continue to be prohibited, as will rotating signs. Inflatable signs are not currently regulated, but we've added that as a definition, and we will not allow those. And off-premise signs are not specifically regulated in the new code, or in the old code, but we're going to prohibit those in the new code. And that is the end of the presentation. I will take any questions you might have.
Any questions for Brandy? Go ahead.
Just one quick one. Is there any provision to the maintenance of the signs that's in here?
There is. We do require maintenance, that they must be kept in a clean and the typical language. It might even be from your same code.
Okay, thank you.
Mm-hmm.
I think we went through down at Window World where the sign was, they moved the road so you couldn't see the sign, and they asked for it to be higher than the 25 feet. So there is a provision in there that they could appeal to the Planning Commission.
Oh, this is something that did come up last week, yes. So I had some conversations with Elaine, the Plan Commission Chair, offline. And as we have it proposed right now, we were going to pull the sign code out of the zoning ordinance. In doing so, that kind of eliminates the option for variances. So we're going to discuss that at the next Plan Commission meeting, whether or not to keep it pulled out or to keep it in the ordinance, in the zoning ordinance, and that way we can have that the variance process in addition to the appeal process. Because I don't know if the appeal would be the route to go after some thought last week in terms of deviation from the regulations.
I just think there should be provision in there to allow someone who, doesn't meet the code that there's
Some
circumstances within the city that they might be able to appeal and get approval. So,
Yep, well, that'll be up for discussion at our Plan Commission meeting.
Councilmember Thurston?
Knowing that we were short on time, that was also one of my points, is just there's some sort of, you know, a process to request if you're, this is kind of a land use issue in the sense that if it's your building and the way it's positioned or located, then it's restricting your use of doing a sign if they have a way of a variance process, but that's good to hear. I just had nothing jotted down going into this, like, you know, neon signs, we don't see many of them, and I recall a controversial, it was the old dental office, he wanted to put dentist neon sign, and it looked great, and it was cool, but, you know, our I don't know if it was our sign ordinance, obviously it must have been, that didn't allow it. Eventually it did go in, but I just kind of questioned, well, you know, why would we be so restrictive on something like that? And window coverage area too. You know, some businesses have a lot of window space and others don't. If they choose to utilize that to do their advertising for their business or their deals, I think, you know, like bars are particular, if they put neon signs inside the window or, you know, 2-for-1 deal or whatever they want to do, it's their business. What's the criteria for limiting the amount they can cover the window?
The criteria? Well, this was a topic that the Planning Commission spent several meetings discussing. So it's currently limited to either 20 or 25%. And so they're increasing that to 33%. And it's just really based on window area. So that's the only criteria that there is. The rationale for that, baby steps towards less regulation, I would assume. If that's something that the council would like to see a little bit, have less regulation attached to it, that could be up for consideration.
I guess I get confused as to, you know, if we're gonna say, you know, your business has lots of windows, you can only cover 33% of them with signage. Like, well, why do we care? If they wanna cover their whole entire window with, you know, graphic wraps or whatever, they have window tint that's kinda semi-visible or transparent, I mean, if that's what they wanna do, I mean, versus right next door, there could be the same building that doesn't have windows, and then they put a sign on there, you know, they don't have the same restrictions, just in a sense, because it's not a window, but I don't know. Just seems to be restrictive, but I like everything I've seen there, that we're going more towards being less restrictive and more, you know, because, you know, other than a few instances, I don't ever see signage being a controversial topic in town.
It can be in some communities, but it hasn't been so far here.
And when it is, it's more personal, you know, I don't like the way that looks. Okay? How do we make a rule, and then, you know, that person moves away, or, you know, it just kind of, you know, subjective, or, you know, so it's hard to make rules based off of certain people's opinions where others may differ, but I'm glad to see that this is, you know, moving along in a more flexible area.
Okay. Any other questions? Councilmember Wong.
Yeah, I just want to thank you, Brandy, and the Planning Commission as well. They put a lot of time looking through and thumbing through the entire document, thinking about, you know, even how compliance will respond to it. So they've done a really great job. Thank you.
I just have a question. Brandy, could you remind us, and I think I know the answer, of what comes next with this and the timing of that?
Yep. So the next Plan Commission meeting will be June 2nd, where I will bring them the draft ordinance in the format within which this body would act on it. And then we will hold a public hearing with the Plan Commission and at their July meeting, and that would come back to you at your third meeting in July. Sorry, your third week meeting in July. It's been a long day.
Yeah, it's like 3 weeks. It's kind of crazy. Okay. Thank you. Appreciate it. That's it. Any other questions? If not, motion to adjourn. Moved by Councilmember Peterson. Second by Councilmember Cole. Any discussion? All those in favor signify by saying aye.
Aye.